Jack Dorsey's company Square buying $50 million worth of Bitcoin. Question is why?
We are moving towards a digital currency world. Bitcoin acts like the gold, the collateral, the personal reserve asset that everybody needs.
10,000 Bitcoin has just been added to Stone Ridge's balance sheet.
Okay, and welcome back to another Spotlight, where we shine our light on the biggest issues in crypto. It feels like not a day goes by at the moment without another major corporation announcing that they're moving their cash into Bitcoin. This time, payments giant Square recently announced that it bought approximately 4,700 Bitcoins for over $50 million. Square has a market cap of over $81 billion and has long allowed users to buy, sell, transfer Bitcoin. This is largely thanks to the bullish stance of founder Jack Dorsey, who also co-founded Twitter in his spare time. He summarized his reasons in an interview with Joe Rogan.
So back to the internet, I believe the internet will have a native currency.
Really?
It'll have a native currency, and I don't know if it's Bitcoin. I think it will, because just given all the tests it's been through.
Arguably though, it was business intelligence leader MicroStrategy who really blazed the trail this year. In August of this year, they made Bitcoin their primary treasury reserve asset, buying over 38,000 Bitcoin worth over $400 million. They say CEO Michael Saylor is probably even more bullish than Dorsey himself. You can't shut the guy up about it. To be fair, at the time of recording, he's already $82 million in profit. Would you shut up if you were him?
My man.
And asset manager Stone Ridge Holding Groups has also now made Bitcoin their primary treasury reserve asset. In the UK, FinTech Mode, which recently raised 7.5 million on the UK stock market, too has allocated up to 10% of its cash reserve to purchase Bitcoin and adopt it as a treasury reserve asset. And the list goes on and on and on. What started as a trickle is suddenly becoming a river. The biggest bull of them all, of course, is asset management giant Grayscale. Grayscale is the largest Bitcoin player in the game with over 450,000 Bitcoin, an astonishing 5.14 billion under management. The majority of this, the company says, is held on behalf of institutional investors.
For us today, I'd say overwhelmingly our inflows into the product, where we actually are directly raising assets, is probably over 80% these days coming from institutional investors. So I'd say we're talking primarily about hedge funds, non-crypto hedge funds, but that also means that we serve a whole swatch of high net worth individuals, family offices, other types of institutions, financial advisors, RIAs.
Institutional investments is something crypto fans have been predicting for years, with frequent claims on social media that the institutional money is moving in. But to date, it never really came. Apparently, the time has arrived. But why now? Does it really help Bitcoin in its quest for mass adoption? And is it necessarily a good thing? For answers, let's go back in time to December 2019. Everything looks pretty much the same, right? Only with less masks, less space between people, and less institutional money invested in Bitcoin. Well, what's changed? Well, in all three cases, the answer is simple: COVID.
Coronavirus!
The financial system was pretty much the same back then. Governments printed a lot of money, cash was depreciating every year. 2020 has shone a stark light on this. With the world gripped by economic crisis following the spread of COVID-19, governments are printing money at a record rate. Michael Saylor has described cash holdings as an ice cube that's melting. He explained that before COVID-19 crisis, the Virginian-based company held about $500 million, mostly invested in short-term US government securities. When yields tumbled in the wake of the pandemic, Saylor started to question that conventional strategy. He estimates that so-called asset inflation will surge to more than 20% a year, eroding purchasing power. Saylor said, once the real yield on our treasury got to more than negative 10%, we realized that everything we are doing on a profit and loss is irrelevant. Bitcoin, he explains, is just better.
I think that Bitcoin is digital gold, and that means it's faster. I can move it 1,000 places in a couple of seconds. It's stronger. I can pledge $100 million of it for 3 hours in Japan on a Saturday afternoon, right? It's smarter. I can write a computer program that'll slice it in a million pieces and do complicated things with it. It's only going to get better every year forever because it's software.
The increasing number of other companies following his lead suggests that the other CEOs are buying into his logic. And it's highly unlikely that they'll be the last. Anyone buying Bitcoin is positive, but such well-established and well-respected forces placing such large bets on its future is a huge show of confidence in its potential and its status as a store of value. Furthermore, it also suggests that the industry as a whole is maturing. We remember you, Mt. Gox. For one, they've clearly reached the conclusions with their compliance teams that the regulatory framework that they need is now strong enough for them to feel confident enough to get involved. Bitcoin is no longer a fringe case. It's ready, it's happening. Try calling Bitcoin a tool for criminals when the likes of MicroStrategy, Square are pumping in hundreds of millions. There are, however, issues. For one, there's an element of centralization that some have taken against. They argue that Bitcoin was built for the people, and companies taking it all goes against everything it stood for. It also just doesn't leave much for the rest of us if they all jump in and take control of so much Bitcoin. We're looking at you, Barry. Ultimately though, there's still plenty of Bitcoin to go around. Bitcoin is infinitely divisible, so you can buy as much or as little as you want. You don't have to buy a whole Bitcoin. They're not here yet. Remember, it's still really early days. What are your thoughts? Who's going to be the next institution? Will it be Amazon? Will it be Facebook? Will it be Google? Let us know in the comments. Make sure you smash that subscribe button. We'll be back soon. But until then, and as always, #Timmy.